Welcome guys, this is Bandit FX and today I'm going to be covering my 3 candle formation that I use to trade crypto. So far I've had an 85% success rate with this 3 candle formation, obviously lined up with price action and the EMAs that I do use, but let's get into it. So the first trade I'm going to be covering is the trade that I actually took on the 27th, which was right here. This is a 4-hour time frame on Bitcoin. I'm going to go ahead and circle the 3 candles I'm talking about. There's nothing really special about this formation. It's something common. You've seen people talk about it before. However, it does work very, very well in crypto. So this is called an evening star. The reverse of that would be a morning star. Whichever you want to call it, doesn't matter. Just know that it does work, and I'm going to show you guys how to execute on it. So basically, the mechanics of this end up being that you have a, you know, bullish candle, you have a doji form, and then a bearish candle form. This is for the evening star or the bearish formation of this 3 candle formation. So basically, um, what you're going to want to look for is, a strong candle going in one direction, a doji to form in a very significant level, and then the next candle to break the low. So once this third candle breaks the low of the doji, that's your entry point, and you're anticipating price to continue down. Now, as far as stop losses go, if you're trying to take a more aggressive entry, you can place your stop above this candle. If you're trying to, have a more conservative entry and you're trying to catch a larger move, but you're, worried that price may chop around a little bit before continuing further down, then you can place your stop loss above the doji. Just know that you will get a better risk reward if you are placing your stop loss above the current candle as soon as it breaks the doji. So um, these work best when paired with price action and EMAs, like I said before. However, I don't have my EMAs showing right now. Here they are. So basically, what ended up happening is, you had price consolidate a little bit after it had a large move to the downside. Consolidated, showing a little bit of bullish exhaustion, and dipped below the 20 EMA multiple times. We get this rejection right on this level and then broke the low, signaling that we should continue down. So that's where we ended up taking that trade. I'm going to give you guys another example. Okay, so let's move on over. Perfect example right here. And this example is important because this did not play out absolutely perfect, but I need to tell you guys um, basically what does invalidate this setup when it doesn't get invalidated. So these are the 3 candles I'm talking about right here. This bullish candle, the doji, and then the bearish candle. Now, what's interesting that happened here is that this third candle did not actually break the low of the doji. However, this setup still remains valid as long as these following candles, this weak bullish candle and then the candle after that, as long as they do not break the highs of the previous candles, this trade remains valid. So you have the doji. This candle did not break the low of the doji, therefore there is no entry yet. We had a weak bullish candle form. There still is no entry, but as soon as you see, this candle come down and then break the low of the original doji without breaking the high, that is when you're taking your entry. So you're taking your entry down here on this doji candle. Wow, that is not even close. On this doji candle, this is where you're taking your entry right at this line as soon as this low is broken. And then obviously you are putting your stop loss either above the current candle or above the initial doji for a more conservative entry. Um, Either way, you are going to get a decent risk reward, but however, just keep in mind with a little bit more of an aggressive stop loss placement, if you are trading with a percentage based risk, you are going to get a little bit more profit potential out of it. So, price did continue down. Um, where we would be securing positions in this case is obviously once the high of the doji gets broken down here. So this is basically leading us into our next example, which happens to be a bullish formation or a morning star of this 3 candle pattern. So these 3 candles is what I'm talking about. Same situation, only obviously reversed. We have a bearish candle come down, a doji formed. Although this didn't open and close in the same exact spot, it did relatively close right where it opened. It was pretty close. So once we had the bearish candle come down, the doji showing a little bit of exhaustion, and then the bullish candle coming up and breaking the high, this is where we're taking our entry. Now, in this case, because there was no bottom wick and this candle basically just shot straight up, I would be placing my stop loss below this doji candle. And the reason for that being is because, you know, if we haven't created that bottom wick, we have to, anticipate that it will form eventually. So while price is coming up, it may come back down, create the bottom wick before continuing. Um, so we do get the entry first. There was no bottom wick created, but we have to plan accordingly in case it does form, because most likely it will form. In this case, it did not. However, if you do have your stop loss down here, you have plenty of room. You're not going to get stopped out, and price did continue in our favor. Now, in this case, where are we going to be taking profits? We're going to be taking profits as soon as you start to see candles close against us and then the lows get broken. So in this case, obviously this low got broken, but it did close bullish. So we're still maintaining, our position in the trade. You can secure something, but, at this point, you should at least have your stops to break even. If you're coming this far in profit, it's just about a one-to-one, secure something. Um, but as price moves down, we did break the low, but this candle ended up closing bullish. So, we're still in the trade, still in the trade. Now, this is where I'm going to start to look to close the remainder of my position as soon as we have a resistance form. So this resistance did form, because we have a bullish candle followed by a bearish candle. There is some sort of a minor resistance at this level lined up with previous resistance. So what we're looking for to close our full position is once this bearish candle's low gets broken, which it did right here. Once this happens, we are now closing the full trade. Now, in this case, you're probably wondering, well, shouldn't we take a short position right here? Normally, I would say yes, but when you line them up with the EMAs, you'll see why I did not, or I would not have taken an entry here. And the reason for that being is, we have this massive push down, huge wick rejection, and then we're starting to hug this 20 EMA, right? So this is showing us that we're no longer stretching way out past these EMAs. You gotta look at EMAs as magnets. They like to pull price back to them. So as price is coming back up and into these EMAs again, once you get a candle that closes inside of an EMA, these are basically, like I said, they're like magnets, but they also act as support and resistance. So now that we broke and closed on the 4-hour time frame above this level, this doji candle ended up just being a little bit of a push up and then basically the retest of this level. So a retest of the 20 EMA after breaking through it, which also lined up with previous price action. This is showing us that price is going to continue bullish and not bearish. So this is a scenario where price wouldn't have gone down, and this was not a valid trade. Like I said, this is why I talk about using this three candle formation along the lines of price action and EMAs as well, not just blindly taking entries once you see this pattern. You have to use it with other things. You have to have confluence. You have to have something showing you other than just three candles printing a certain way that, hey, this is where price is moving. It has to make sense. You can't just be taking entries for no reason. Um, Obviously, you know, you guys have to look for basically the more things that you can check off a checklist, the more confluences you have, the more likely it is that you're going to win that trade. So, um, yeah, guys, it's just a very short, simple video on the three candle formation that I use to trade crypto. Like I said, this has a very high success rate if you do use it correctly. Um, like I said, this is for higher time frames. It does work better, but however, you can take 30-minute entries, hour entries, things like that to scalp cryptos a little bit more if you'd like. This all depends on your style. Personally, the 4-hour does move a lot cleaner and a lot better, so I tend to stick to that for the most part. So yeah, guys, if you liked the video, leave a like, comment your thoughts on this entry formation. If you guys have any questions, let me know, and I'll feel free to answer them. And if you haven't already, please subscribe.